localwebradio.fm, your trusted voices on the Semiahmoo Peninsula.
Welcome to the Mortgage Newscast with Jared Dreyer, brought to you by Drayer Group Mortgages. Now, here's your host.
Well, yes, Erik Reynolds here, and yes, I'm back, and I'm your host again, and I'm here again with Jared Dreyer, accredited mortgage professional and president of Drayer Group Mortgages, a proud member of the Verico Brokers Network. Now, today, we'll be discussing variable versus fixed mortgages, the different advantages to both, and how your mortgage broker can assist you in determining your best option. Now, before Jared joins us, just a quick reminder, if you have questions or require assistance, you need to talk to Jared and his team at Drayer Group Mortgages at 1-800-687-9020. Again, that's 1-800-687-9020. Well, Jared, as always, great to be talking with you again today.
Yeah, it's great to be talking to you as well, Erik.
So we're talking about variable versus fixed rate mortgages today. And let me just ask you just a basic number one question. What is a fixed rate mortgage?
Well, Erik, that's a very good question because a lot of people do not know the difference between what is a fixed rate and a variable rate. And a fixed rate is the rate is constant for the term of the mortgage. So that if the interest rate fluctuates, your rate and payment remain the same for the length of the term. And of course, that term can be anywhere from 1 to 10 years. And, fixed rate mortgages, what you usually do is you pay a premium for the rate security. Payments do remain the same. It could potentially be easier to budget with fixed payments, and you have no worries during that term of any payment increase.
Now that we know about a fixed rate mortgage, can you walk us through what a variable rate mortgage is?
Absolutely. Well, a variable rate mortgage is usually lower than a fixed rate mortgage. And the reason for that is the rate is tied to the bank's prime rate. And so it can fluctuate over the term of the mortgage if prime does go up or down. So a variable rate, the interest rate can fluctuate, but the rate is lower, which means you can actually pay less interest and more principal during your term of the mortgage. And of course, if rates are on the rise, a borrower does have the ability to convert at any time to a fixed rate during the term of the variable rate mortgage.
Now, Jared, let me ask this. You said that a variable rate mortgage, the rates are lower. Is qualifying for a variable rate mortgage the same as, say, for a fixed rate mortgage?
Great question, Erik, and actually it is not. There was recent rule changes that were introduced by OSFI in 2012, which make it a little bit more difficult for borrowers to qualify for a variable rate mortgage. Borrowers must now have to qualify based on what the 5-year Bank of Canada rate, which is currently sitting at 4.79%. This way, this ensures that the clients can handle higher payments if rates ever do start to rise. But I will definitely make a note that, we haven't seen an increase in prime in almost 3 years, and the forecast is for stability in the prime interest rate at this time.
Well, Jared, I have a few more questions, but we'll go ahead and take our break now. And we'll be right back with Jared Dreyer, accredited mortgage professional. And when we get back, we'll be discussing accelerated payment options and reducing your mortgage principal. We'll be right back.
The Mortgage Newscast with Jared Dreyer will return after a quick word from our sponsors.
Take control of your financial future with sound investing with Byron Stryloff, Senior Investment Advisor and Chartered Financial Planner with over 30 years of experience on the Business Channel on localwebradio.fm.
If you're struggling with a dental or oral health issue, be sure to catch the Healthy Smiles Oral Health Show with Dr. Norm Ickard on the Health Channel on localwebradio.fm.
Buying or selling a home on the Semiahmoo Peninsula? Catch up on local market conditions on This Week in Real Estate with Lance and Connie Marples from Sutton West Coast Realty on localwebradio.fm. To schedule a face-to-face consultation, you can reach Lance and Connie at 604-538-8888. That's 604-538-8888. And visit them online at www.surreywhiterockhomes.com. Now, back to the Mortgage Newscast
with Jared Dreyer
on localwebradio.fm.
All right, we're back again with Jared Dreyer. We're discussing strategies for paying down your mortgage. So, Jared, let's talk about that. Now, you've talked about the principal reduction strategy before, but can you explain it again?
Yeah, absolutely. I mean, the strategy is geared towards buyers who qualify for a variable rate mortgage. And what we want to do is we want to set their payments at whatever the current 5-year fixed rate is. And the reason we do that is usually you're paying about 1% or 1.5% higher on a 5-year fixed rate versus a variable rate. And what you have the availability to do is if you set the payments higher, you're going to pay much more towards the principal and less interest once you make a variable rate payment. So this way, it allows you to do two factors that are very important. One, it prepares the client. If interest rates are on the rise, you're already ready for the payment shock. But the most important thing it does, it pays down your mortgage balance that much quicker. So that way you can be mortgage and free even sooner.
Jared, now that we're kind of getting close to the end of the episode, do you have any final thoughts you'd like to share?
Yes, Eric. I mean, traditionally, more Canadians have chosen fixed-rate mortgages, versus variable rate mortgage have proven to be less expensive over time. And, I got to emphasize that is that variable rate mortgages, if you look over the history, have been a lot cheaper than fixed-rate mortgages as far as the consumer to save interest. And that's the key thing. You want to save interest costs and pay more principal. So there's definitely advantages to both products. What you have to do is make sure that you discuss your options carefully with an independent mortgage advisor before you make any firm decision, and make sure you do your research.
Well, Jared, it's been really helpful talking with you about mortgage rate options. And you know what? I can tell, I'm sure our listeners can too, that using a mortgage professional is so beneficial in helping with this decision. Now, in our next episode, Jared will be discussing the importance of becoming pre-qualified for a mortgage. Now, if you, the listener, have any mortgage questions or are considering refinancing, you need to talk to Jared and his team at Drayer Group Mortgages at 1-800-687-9020, or you can reach them online on their website at www.drayergroup.ca. Well, Jared, once again, thanks so much for the conversation today.
You're very welcome, Eric.
Thanks for listening. To learn more about Drayer Group Mortgages, visit www.drayergroup.ca. That's www.drayergroup.ca. Or call 604-536-3802. That's 604-536-3802.
localwebradio.fm.
This episode is a production of Jam Media. For information on hosting your own web radio show, visit jammedia.com. That's www.jambmedia.com.
The opinions expressed by our guest and host on localwebradio.fm do not necessarily reflect the views of Jam Media or its owners. No expressed or implied opinions of any product or service should be considered an endorsement or recommendation of any kind by Jam Media or its owners.